Hey everyone, welcome back to Corporate Decoder, the place where we unwrap the mystery behind those confusing corporate filings. And today, it looks like we've got a real treat from ABM Industries Incorporated that hints at some big, game-changing moves. Get ready, because we are diving deep into a report that reveals a massive acquisition and a glimpse into the company's recent performance and future plans. Stick around to find out what this all means for your favorite service provider. And hey, if you love getting the real story behind these documents, make sure you are subscribed. We also have a growing community over on Discord. The link is in the description below, so come join the conversation. Alright, let's get right into it. ABM Industries is filing what's called a Form 8, which is basically a report for big, unexpected news that shareholders need to know about right away. Think of it as the company yelling from the rooftops, hey, something important just happened. And boy, did something important happen. On the 15th of December 2025, ABM Industries, or ABM as they call themselves, signed a deal, a share purchase agreement, to buy another company. This isn't just a small purchase, they are acquiring all of the shares of a company called IV New Opportunities Limited and all of its smaller subsidiaries, which they're grouping together and calling WGN Star. The price tag for this whole operation is around a hefty $275 million. That is a lot of cash changing hands. ABM plans to pay for this big move using money they already have and by borrowing some more under their existing credit line. Now, this deal isn't done and dusted just yet. There are a few hoops they need to jump through. The big one is getting approval under a law called the Hart-Scott-Rodino Antitrust Improvements Act. This law is all about making sure that when big companies buy other companies, it doesn't hurt competition in the market. They also need some other approvals, especially in Ireland where the target company is based. As part of the deal, the sellers are promising to keep the business running smoothly, just like they always have until the deal is officially closed, and both sides are agreeing to do their best to make this acquisition a success. There are also some safety nets in the agreement, like limited ways to get out if something goes seriously wrong, or if one party breaks a major promise. But that's not all. On the same day this acquisition was announced, the 17th of December, ABM also put out a press release about their latest financial results. This is where we get a look at how the company has been doing. This press release, which is included as an exhibit, talks about their performance for the last quarter and the entire fiscal year that ended on the 31st of October, 2025. It also mentions that they've declared a dividend. This means they are sharing a portion of their profits with their shareholders. The dividend is set to be paid out on the 2nd of February of next year to those who own the stock by the 14th of January. This action signals a company that is confident enough in its financial health to return value to its investors. And just to make sure everyone knew about the big acquisition news, they released another press statement that same day. So, you have news about financial performance and a major strategic move hitting the market at the same time. Let's dig into the dividend a bit more. The board of directors decided to declare a quarterly dividend of 29 cents per share. While this number might seem small, for a company like ABM Industries, it represents a commitment to rewarding its shareholders consistently. It's a positive sign that they expect to have the funds to continue these payouts. Now, let's shift our focus to the acquisition itself. Buying a company for $275 million is a massive undertaking. This suggests ABM is looking to expand its reach, gain market share, or perhaps acquire new technology or services that complement its existing business. The fact that they are financing it with cash on hand and existing credit lines indicates a solid financial foundation and a deliberate strategy to fund growth without taking on excessive new debt immediately. The requirement for antitrust review is a standard but important step, ensuring that this merger will not create a monopoly or unfairly disadvantage competitors. The closing conditions seem pretty standard too. Things like antitrust approvals are normal for deals of this size. The other regulatory approvals in Ireland are also expected for an international transaction. The representations, warranties and covenants are the legal promises and commitments made by both the buyer and seller to ensure the deal progresses smoothly and as expected. The mention of limited indemnification means that if something goes wrong after the sale, the seller's responsibility to compensate the buyer is restricted, which is typical in many M&A deals. Looking at the financial results, it is crucial to understand what the fourth quarter and the full fiscal year earnings tell us. While the specific numbers from the earnings press release aren't detailed in this particular filing, the fact that they are announcing them alongside the acquisition suggests the company feels its performance is strong enough to support such a bold strategic move. Investors will be keenly looking at revenue growth, profitability, and cash flow to gauge the health of the core business. So, what is the story here? ABM Industries is making a significant growth play, acquiring a company for a substantial sum. This acquisition is being made against the backdrop of their latest financial results, which are being presented as solid enough to warrant this expansion. This is a company that is not content with its current position and is actively seeking to enlarge its footprint and capabilities. The dividend payout further reinforces the image of a stable and shareholder-friendly company. Now let's put on our Warren Buffett hat and analyze this. ABM Industries is demonstrating a proactive approach to growth. Acquiring a company for $275 million signals confidence in the future and a clear strategic direction. The financing plan using existing cash and credit suggests financial prudence. However, the key will be how well WGN Star integrates into ABM and how much value it truly adds. Are they buying a business that is growing faster than their own? Are there synergies that will boost profits? These are the questions that will determine the success of this deal. The antitrust review is a checkpoint that ensures the market remains competitive, a good sign. The dividend indicates management's belief in the company's ability to generate consistent earnings. Looking at the overall direction, ABM appears to be in an expansionary phase. The strengths lie in their apparent financial stability and their willingness to make bold strategic moves. However, a notable risk is the integration of the acquired business. If not managed well, integration can lead to inefficiencies, culture clashes, and failure to realize expected benefits. Another opportunity lies in the potential for market expansion and increased service offerings that WGN Star might bring. In conclusion, ABM Industries is making a significant move with this acquisition, signaling ambition and a focus on future growth. The financial results, while not fully detailed here, seem to provide a supportive platform for this expansion. The dividend payment further solidifies a positive outlook for shareholders. The success of this venture will hinge on the effective integration of WGN Star and its contribution to ABM. It's long-term profitability. What are your thoughts on this big acquisition? Do you think ABM is making a smart move? Let us know in the comments below. If you found this deep dive into ABM's filings helpful, please give this video a thumbs up and hit that subscribe button so you don't miss our future corporate breakdowns. And don't forget to join our Discord community, linked in the description for more in-depth discussions. Thanks for watching, and we'll see you in the next one.